I'm Impact Alpha's Senior Editor for Emerging Markets, and I'm joined here for this discussion with representatives of some of the most influential, invested, forward-thinking organizations in the field of global financial services. So as a quick beginning, I'd like to introduce in this discussion today, we have Michael Schlein, President and CEO of Axion, Linda Kirkpatrick, MasterCard's President for the Americas region, Sophie Serten, CEO of CGAP, and hopefully shortly we'll also have Renato Gomez, who's the Deputy Governor and Financial Systems Organization Head for Brazil Central Bank. Okay, opening discussions for a forum like this always have a pretty weighty task ahead of them. This one is particularly special because it's the 10th edition of Financial Inclusion Week. And I think that milestone offers us all an opportunity to look back at where we've come in the past decade, what we've learned, and also what challenges and opportunities lie ahead. So I expect many of the discussions this week will build from the issues and perspectives raised in this conversation today. For myself, in preparation for this panel, I spent a lot of time reflecting on my own reporting on financial inclusion for Impact Alpha over the last 10 years. And in that time, about 1 billion people have been brought into the formal financial system who weren't there before. There's, of course, a lot of work left to do. There's 2 billion people who, nearly a quarter of the world's population, who are still financially excluded. But 1 billion people is a huge accomplishment. And now that there is some connection to them and between them and the financial community, I think the door is open really to deliver new types of services and expand the range of what's available to them, and even to design new financial services specifically for their needs. To support their families, their livelihoods, their security, prosperity. But I think what stands out to me most actually about the last decade's work in this field is how the pace of innovation has really been hypercharged since the pandemic. There's, of course, an asterisk on that 1 billion figure. We have lost ground because of the economic strain caused by the pandemic. And I don't think we can ignore how much harder the increasing unpredictability of climate events is going to make in serving new financial customers, and including also deepening the relationships we have with those 1 billion people who've recently been brought into the system. But I think what makes me hopeful is that the tools developed in the last decade have given us a window into the lives of the people who were all previously, all but invisible to financial services providers before. And that look into who they are and how they work and what they earn and spend and what their priorities and goals are has really led to this explosion of new products and platforms and services and opportunities for engagement. And so as we begin here this week of discussions, Michael, I'd like to open it over to you to set the scene a little for us. What are your reflections from the last 10 years? I know that's a big ask, but please start us there.
Well, thank you, and thank you for everyone for joining this. I do think we collectively, the industry, and I do think this Financial Inclusion Week really brings together the industry. I think we have made remarkable progress from going from 3 billion people to roughly 2 billion people excluded. That is enormous progress. And if you think about it, what's behind that? Obviously. The internet, mobile phone, broadband, cloud computing has allowed entrepreneurship to happen anywhere. That used to not be the case. And it's also allowed us to see people who have until now been invisible. If you think about it, the history of how we have allocated credit, it used to be the only place you could go for credit was a bank, and the only people they would lend to were people they had already lent to. That's the definition of exclusion. The microfinance revolution was really harnessing groups of women, and then later on cash flow analysis to expand who we could lend to responsibly. But the real revolution that we've seen in this last decade is data. The data explosion. And by its nature, data is inclusive. It's not that all these people were bad credits, it's they were invisible. And now we are, the most remarkable thing over the last 10 years is the data explosion and our ability to understand that data and see things that we've never seen before and find very good understand the financial needs of those people all around the world, and the innovation that is being unleashed by that data is very, very exciting.
What's your sense actually of, given this current environment, what the next 10 years are going to look like, especially, in light of that explosion of data that you just described?
So I do think, look at it two ways, right? If the big numbers, if we went from 3 to 2, first of all, reaching the next 2 is going to be harder than the last. They are smallholder farmers in very remote areas. They are women. They are small businesses. They are the nature of work itself is changing. So there are a lot. I think the next billion is going to be harder than the last billion. But also, let's look back at that going from 3 to 2. A lot of that is just access. We have to really work on moving that billion from access to real meaningful usage of these tools in their lives. I think the biggest challenge is seizing this moment. If you take a few steps back, in our lifetimes, we've seen global poverty go down and down and down. We've literally lived through the last several decades. We've seen the greatest decline in poverty ever in human history until today. All of that is stalled. Some of it, is because of the pandemic. Some of it is because of climate crisis. There's many, many reasons, but the progress in reducing poverty has stalled. And yet we're also living this this technology revolution and data revolution. So the work that we're all doing can be much more impactful than it's ever been before. So you put those two ideas together, and what we really need to do is seize this moment. Because what we're doing is more important than it's ever been before, and the impact we can have is greater than it's ever been before.
I have one, sort of follow-up question on that, and that's that you describe the data revolution. So having the data is one thing, but knowing what it means and knowing what to do with it is something very different. So, in light of that, and just the whole process of bringing 1 billion people into the financial services sector in the past decade, what have we learned about what has worked and what hasn't that can sort of help guide us in the next 10 years?
I think we're still learning. I think, first of all, I give a big role to governments around the world. And I think Renato is joining us. But I do think India, for example, China, and also and Brazil, and many countries are leading the way in digital public infrastructure and providing some of the basic rails on which then we can build the higher functioning services to reach people who have been left out. We saw during the pandemic, many, many countries, something like 166 countries, which is nearly all of them, created over 400 cash transfer programs that reached over 1 billion people, and many of those people were being reached for the first time and reached digitally. So we saw, again, the pandemic. It was referenced in the video. The pandemic was terrible, but did accelerate financial inclusion, or at least financial access in certain ways. The data and the algorithms that we're now using have changed every aspect of our lives, but really are changing the way we can reach people who until now have been left out.
Thanks, Michael. I want to do, before we really dive into some of those meaty subjects that you brought up, I want to do a quick pulse check with Linda and Sophie. What's top of mind for both of you each morning, this morning especially, when you get up to do this work every day? Linda, I'll start with you.
Yeah, thanks. First of all, thanks for having me and for having this important conversation. This is our partnership at MasterCard with Axion is a real point of pride for us and has been for us an enabler of driving inclusive growth. You referenced at the onset, this is the 10th anniversary of Financial Inclusion Week, which is serendipitously aligned with the 10th anniversary of our Center for Inclusive Growth, which we started with the express purpose of bringing 1 billion people into the financial mainstream by using our superpowers at MasterCard and working with private organizations to help enable that. It's also the 10th anniversary of an initiative that we call StarPath, which is an effort that we've been undertaking for many years, to bring the best of fintech into the mainstream in the space of inclusion. Especially, we had 400 companies that we evaluated and brought into our family to broaden our reach and our scope. And so I just think the folks on this panel, Axion, the partnerships that we've created over the past decade with real intentionality, with real investment, with real KPIs and measures of success, have actually driven this progress. And I think we all have a lot to be proud of. In terms of what's on my mind is the importance of maintaining what we've got and not going backwards. If I look across the past 10 years, I think the progress we made is a result of the convergence of three factors. Really, the first is, as Michael talked about, it's the access itself. When we look across the globe, the use of digital forms of payment has increased by 13 percentage points in a 5-year period from 17 to 21. And talking about the pandemic, which is a real example of good things can happen from even the worst of situations, 40% of people that made a digital payment during the pandemic did so for the first time. Mm-hmm. So if you think about that, just pause on that stat in particular. The pandemic forced not just access, but usage for people that needed critical aid, and the acceleration of that financial literacy and adoption just would never have happened without that urgency. In Latin America alone, we now see 80% of the population with a smartphone. Mm-hmm. So what was creating barriers for us is now creating opportunity. And so we have a great foundation from which to build. And the public-private partnership progress enabled by the fintech community in particular. I mean, this, for me, what I think about is, while we have, each of us has tremendous intent in our strategies, we each have our individual superpowers. And it's only when we unify our superpowers that we can get the best of what we each have to offer. And, large multinationals are very powerful globally, but the fintech community and partnerships like the one we have with Axion allows us to get very local in the communities that need it the most. And that, as I think about the convergence trends, the opportunity to focus and be targeted in the communities that need our help the most, aided, of course, by government aid, mm-hmm. I think has also driven this transformation. So I think what's on my mind is, how do we preserve the goodness of what those trends have created and stay attuned to what we need to look forward to in Financial Inclusion 2.0.
Wonderful, thanks. Sophie, I'll ask you that same question. Tell me what's on your mind when you get up and start this work every day.
So what's really on my mind is the enormous potential we all have in this industry to contribute to making the world better. I think Michael set the stage perfectly well for us in the sense that I think on the one hand, we have accomplished enormous progress over the last decade in terms of access to accounts, and that has really been the consequence of concerted efforts from all parties in the public, in the private sector, multilateral institutions, etc. And we could give ourselves, a pat on the back. But I also think that the industry is really at an inflection point. Mm-hmm. We could do that, or we could do what we were always intentionally intending to achieve, which is to contribute to higher development outcomes. And we always saw financial inclusion as an enabler of resilience, of women economic empowerment and agency, of economic opportunities for all. And I think in that context, we are really not yet at destination. Mm-hmm. There's still, as Michael said, the world has turned worse, if anything. Resilience for the poor is still an enormous challenge. Climate has added to those challenges enormously. women economic empowerment is a totally unfinished agenda. Jobs and entrepreneurship is a huge challenge for the youth in many continents, especially in Africa. And yet we know that financial inclusion, and we have the evidence, can really contribute to all of these global challenges. And so for me, that what motivates me every morning is this potential, the fact that as an industry, we can leverage our progress and we can contribute to those objectives. But I think two things need to happen. One is, as I think, Linda, you just said, we can't let the last mile effort go by. In other words, we still have 1.5 billion people that are not connected to financial services. And they will never benefit from all these economic benefits if we don't do that. And I think it's going to be much harder. I think Linda and Michael explained very well that we've learned a lot. There's so much we know about access, especially around DPI, around government transfers, etc. And yet for that last mile, it's going to be much harder for many reasons that we can discuss later. But there's social norms that come in the way, there's economic exclusion that comes in the way, there's connectivity and the cost thereof that comes in the way. Yet there's opportunities too. Data, as Michael said, is probably the biggest opportunity. And so that's one challenge I think we need to achieve. The second is we need to intentionally put our sights or ambition at the level of these outcomes. We can't just focus on the mechanics that create access or even usage. We really need to now think about how am I going to design my products, my interventions, my policies so that I enable these outcomes from my financial inclusion interventions to materialize for everyone on the planet. But I'll stop here. I found the future bright, challenging but bright.
Wonderful, thank you. Well, we have a lot more to discuss on that, so we'll be back for that. Renato, the question, I know you joined a couple minutes into the discussion, but the question is, as we've over the past decade, done this work and bringing 1 billion new people into the realm of financial services and are looking to the next 1.5 to 2 billion people. What do you think about every morning when you start this work? Like, what's top of mind? What feels most urgent to you?
Oh, sure. So thank you so much for having me here. I apologize for the technical difficulties. The link was blocked, but we succeeded. I would say that when I wake up, in a sense, the main policy goal that we're still on the road to achieve, but there is a long distance yet to go, is on adding quality to the financial inclusion that so far we have obtained in Brazil. So I think that we have some recent statistics on the amount of people that started using accounts actively. So from 2018 to 2013, the number of people using accounts actively for either payments or credit jumped from around 60 million Brazilians to more than 120. So you essentially doubled the number of people actually using the financial system. The number of people that did a digital transfer for the first time in the first 12 months after peaks reached more than 70 million people. So there's really a lot of inclusion going on with the PIX agenda, and before the PIX agenda, the pro-competition agenda that very much simplified how financial institutions could enter the Brazilian market. So we saw ourselves in 2022. I think 2022 is a good year to talk about that. With a base that increased very fast, but then we saw a lot of expansion of credit, and this expansion perhaps was not so orderly as one would like. So there is a measure that we constructed using administrative data that tries to assess a risky indebtedness by the Brazilian population. So we have a few markers, such as being delinquent for more than 90 days, being delinquent in at least 2 credit instruments, or having more. This is the third marker is having more than a certain level of your income committed to servicing debt, or to own more than a certain fraction of your annual income. So we have these 4 markers. If 2 of these markers are red, let's say, at least 2, we say that you are indebted at risk. And in Brazil, in late 2022, in fact, early 2023, we had more than 15% of the Brazilian adult population being classified as with risky indebtedness. So I think that the main challenge now is actually, in fact, moving towards a focus on financial health. I think the financial inclusion, there is still the last mile. We are very much concerned about the last mile, and there's a lot of work to do in that respect. But also, we already have a huge amount of people that got included, and I think this inclusion, on average, helped. But it could be much better if essentially we perfection our policies, focusing more on consumer protection besides the usual focus on competition and technology that we adopted so far.
Renato, thank you for setting that up. Actually, I want to stick with you for a second. Being an impact investing reporter, my lens on financial inclusion often focuses on what's happening in the private sector. And I expect probably a lot of people who are tuning in today, are similar. But Brazil is really this remarkable case study and model on the role of public institutions in driving financial inclusion, and also in building safety nets and guardrails around that. You talked about the PICS agenda, and I'd like actually just for those who are listening who aren't familiar, maybe you can just sort of give a quick backgrounder, very quickly on what PICS is. It's this national digital payments infrastructure, but maybe you can just sort of explain how that came about and what the impetus for it was.
Oh, sure, absolutely. So PICS is the fast payment system that the Central Bank of Brazil launched in 2020, November 2020. And it's indeed, as you said, a digital public infrastructure that essentially every payment or financial institution with more than 500,000 accounts had to join. So we had this compulsory joining from the beginning. PICS. So the central bank only provides the infrastructure, right? It's the institutions that connect to the infrastructure. They are obliged to connect and offer the services to their customers. And we very much micromanaged user experience. So in the cell phones of people, PICS looks the same essentially in every institution. What you need to fill to make a transaction, the logo and all of that. So that gives the feeling to people that it's a unified product. It's not like different transfer schemes depending on the institution. It's the same thing, and people know that in the background there is the central bank, actually powered by the Central Bank of Brazil, to make sure to instill that trust that it is indeed the digital public infrastructure taken care of by the central bank. In terms of fees, as the scheme owner, we decided that PICS has to be for free to individuals. So P2P is for free, and P2M, person to merchant, is also for free to the person, but not to the merchant. So the payment service providers, they may charge the merchant if you like. In fact, PICS brought so many new clients to all institutions that most merchants, at least the small ones, they are not charged at all for PICS. So in a sense, we had the concern from the beginning that we need to give a business case for the financial institutions to embrace PICS and to publicize it and to make sure that people have a good user experience. So the emphasis on the business case was important. We thought that the business case would actually go from the merchant side, and we are actually surprised that the business case essentially came from the sheer number of new people making digital payments and starting with payments and then going to credit products. So it's the sheer amount of new clients that all institutions benefited from. So in a sense, the most of the institutions, they lost some service fees for payments that they enjoyed before with RTGS based electronic transfers or fees from debit cards. Those fees, they got reduced, but it didn't affect the business case of these institutions because of the new incoming people. So the pie was much larger, although certain payment fees became irrelevant. So I think that was a happy experience because we could coalesce the industry towards this financial inclusion's objectives, reconciling inclusion with let's say a business rationale.
Renato, thank you. You alluded to what the impact of this has been on making financial services, starting with payments as the entry point for a lot of Brazilians, and how they've sort of graduated up the financial services ladder into credit products and other products, it takes a great deal of trust, I think, from the public to be willing to work with a system like this. Linda, I know you're deeply engaged in the Latin America region, and that you have a lot of experience and also some strong views on, what the public and private sector's roles and obligations are to, building this trust with the consumer base, but also, protecting consumers from risks that, especially those who are new users, might not necessarily even be aware are there for them. Whether that's fraud or identity theft, other risks. I wonder, could you share a little bit about, what your take is on this as sort of course, this digital public infrastructure is essential, but, what are maybe you can sort of balance that out for us, like what the need versus what, the risks and concerns are.
Happy to. So you were asking earlier, talking about what's it going to take to bring the next billion into the financial mainstream. And, my opinion is there's two things that, kind of structurally will stand in the way of making progress. This is obviously a much more complex group than the first billion, requires a bit of a different go-to-market approach than the work that we've done over the past decade. And I think if I were to boil it down to two things that we need to focus on collectively, private sector, public sector, non-for-profits, fintech, the two things that I would anchor on would be trust and moving from access to usage. And so just on the topic of trust for a second, because we've mentioned it a few times, but I think putting a pin on this and the risk of losing trust. I think trust is something that takes a really long time to build and can very quickly be removed. And when I think about the global cost of cybercrime, this year it is expected to reach $6 trillion, and that's only going to rise in the future. The topic of fraud, it truly is as complex as inclusion itself, because what we see is that fraudsters are benefiting as much from digitization as anyone else. And the challenge here is that the communities that are most vulnerable are the ones that we just spent the last decade bringing into the tent, right? Women, small businesses, the underserved. These are the groups that we know through our research, they are targets for fraud. And the minute that a small business owner, a farmer, single mother is a victim of fraud, the minute that their funds are stolen from them and they have no recourse to collect them, that's going to reverse the confidence that we've created in the system and the access that we've collectively worked so hard to build. So we at MasterCard, we spent a lot of time, a lot of money, a lot of energy thinking about this topic of trust and how to preserve trust. We actually just announced a couple of weeks ago a $2.65 billion acquisition of a company called Recorded Future, which is the largest threat intelligence company in the world. They use AI to identify when a cyber attack is about to happen before it happens. And that their work includes work with 25 different governments around the world. And so we've been really privileged to sit at the center of this trust conversation and use our superpowers to say, look, we've got hundreds of billions of transactions that we process. We layer that with fraud tools. We work with other entities around the globe, and we can fortify our system, build trust, protect against fraud together. And so that, to me, it is paramount. It's going to remain paramount in this quest for the next billion. The second thing that I think I mentioned we need to focus on is this access. Moving from access to usage. And, as I look at Brazil, I mean, there's so much to be proud of in Brazil. Renato just articulated the great progress that the central bank has made. We've been very fortunate to be able to partner with the Central Bank of Brazil as well. We have another partner in Brazil with Nubank, which has just been absolutely transformational in the market for the underserved. And they're, as they are actually a bank, and they've just done a tremendous amount of work. We've been fortunate to be their exclusive payments partner throughout their journey. We've learned from them. We just conducted about 6 months ago a survey with them in partnership with them. And we asked the same question, like, how do we get to this next level of inclusion? And what we concluded was access alone is not enough. The frequent use of digital payments is a better predictor of financial health than income. Meaning, once you have access, which is critical, which is what Renato just talked about, we now need to pivot our attention to usage to ensure that those that have access stay in the system. And so, so trust coupled with this usage, an ongoing usage, that's what's going to take us to the next level. So then you translate that over to digital public infrastructure and the importance of principles that we all need to keep in mind as we think about the evolution of DPI. We've thought long and hard about that at MasterCard. And while so much progress has been made, so much more now needs to be. We need to kind of use this as an inflection point and say, okay, how do we make it even better? And as I think about the principles that will make it even better, and again, as a network that's been in existence for 60 years, we recognize there's a few things that have served us well. To be able to operate a global interoperable network takes a lot. It starts with transparency of governance, transparency of policies and rules, and being open to working with everybody, all key stakeholders. No one should be excluded in the space of operating a network. Grounding ourselves in privacy with strong data privacy practices absolutely should be at the fore. Being really targeted in our scoping, recognizing that if something is working in a market, let's not disrupt what's working. Let's focus on the markets that need it the most. India, Brazil, great examples. Preserving choice, preserving competitions in markets that are working well. I think we've got a lot of work to do, so we can leave those markets alone and focus on the markets that need it the most. Equal access to all, ensuring that all players who participate have an environment of fair competition, an environment where inclusion is voluntary and not forced, something that's critically important. And then something that, really I take really seriously, and it's served us well at MasterCard, which is the importance of commercial sustainability. We would not be able to do the work that we've done at MasterCard without connecting the dots between the work and the commercial success of the company. Why? Because we're public, we have shareholders. So being able to articulate why this work can be commercially sustainable for the future. It's not a one and done. It's not something that is episodic. It's got to be always on. And so recognizing that you need a model of financial benefit that really encourages participation by all stakeholders for the long term, very, very important. And that's not just making sure that people can financially benefit from participation, but also have enough to invest in the fraud and then safety and security and the preservation of safety and security for the long run. And because that goes right back to what I started with, 6 trillion, 6 trillion in cyber threats this year alone, only getting worse. So I really, I'm passionate about this because I've seen it, at almost 3 decades at the company. I've seen what works well. And these principles, are all, they're all the ingredients that make up the recipe for success with both inclusion and long-term sustainability.
I know. I mean, you alluded to the Star Path program, and so I know you have a lot of good examples, that come out of that highlight, what works, what doesn't work. And I'm going to come back to you on that, Linda. First, Martha, I want to go to you because we've heard from Renato, we've heard from Linda, we've heard from Sophie, and all three have mentioned this need to move beyond just this idea of financial inclusion as being accomplished by providing access to deepening the impacts and the meaning of these products that we're serving and intent for what those products are. Can you talk a little bit, what's your view, for this field? Are people moving there, or are you finding that there is still this thinking around financial inclusion equals access, and we haven't quite gotten beyond that yet?
No, I think the industry is moving. But before we get to that, let me just pick up on some of the themes that Renato and Linda were talking about. And I'm quick to point out, I really do think Brazil and India, and there are a handful of countries that are true leaders for the world, and they are true models for the world. But I think, and this goes back to the next billion, I think the tougher challenge is going to be in countries that do not have the intellectual and financial resources of Brazil and India. And there are many, I would say even most, emerging market regulators that are, dramatically underfunded and have a hard time keeping up with new technologies. And I do think we can be very excited about DPI when it's rolled out really well. But we have to worry about where it's not rolled out well. And in fact, the Center for Financial Inclusion has done some great research and done some deep dives in places where it's not Brazil and it's not India. And there are challenges with rolling out a national ID structure, and there's challenges with government using this data for censorship or for retribution or for surveillance. I mean, we have to really worry about privacy. And also a theme that Linda touched on, this is all new and exciting, but how do you make sure that these systems stay innovative? I tend to think the private sector does a better job at that than the governments. Governments come under different pressures, and all of a sudden things get cut. So in the long run, we do have to really think about what's the role of the private sector in digital public infrastructure. How do you balance all that? So I think there's some really interesting, challenging issues, especially when we get to the next levels of countries that may not have the same resources that Brazil does. Your broader question I do think people really get it. I think one of the most exciting things is, Financial Inclusion Week is the perfect example. This is a movement. This is bigger than any of us, and it takes a movement. I mean, that is remarkable progress to get 1 billion people to gain some sort of access to the financial system. And I do think as an industry, we are very focused on how do you make sure that's high quality? How do you make sure that we're really moving people up from just access to usage to real impact in their lives? Think about your own life. I use financial tools many times every single day. Some of that billion is just once a year. That's not really access. That's dormant accounts, and mostly that's a government payment that then gets taken out as cash, and then you don't even use the tools. But so what we really want to watch and monitor and promote is usage, and then measure the impact and hopefully the improvement in people's financial health. So but I do think as a movement, I think we're focused on the right things.
Yeah, I'm glad actually that you brought up the issue with many governments are not as well resourced, as you mentioned, as Brazil, India, China. And not only are they not as well resourced, they're also dealing with just other pressing financial and economic concerns, right? Many emerging market countries are either on the brink of default or have defaulted already. It's just, it's where you put your financial resources is a luxury in a lot of places. And there are just much more pressing concerns, particularly as we're seeing it, we're in the middle of this devastating storm season that's affecting, most of the Americas at this point. And climate impact is a real concern. And so thinking about, financial infrastructure, maybe it could seem like a luxury in some places at this point. And yet, this wave of innovation is happening already. It can't be ignored. Sophie, I want to turn to you because I think this is really, this is your day-to-day work. You're having to sort of deal with those realities that Michael and I just talked about, while also helping the industry think about what comes next and moving forward. And so I know earlier this year, CGAP launched this new initiative that you're calling Financial Inclusion 2.0 to push financial services actors to deepen their work and thinking around the meaningful benefit and impact of these products and services. Can you, just as a starting point, just share a little bit about what this initiative is and why it's important now?
Yes, absolutely. But I want to come back for 2 seconds to what Michael and Linda were discussing, because I think it's fundamental. So there's a lot of challenges even before we start thinking about our next journey in just moving the needle for those last mile people. And I think they touched upon two that are crucial. One is the situation for these people today is much more complicated than for others in general. 7 of the 9 countries where financial inclusion is below 25% of adults are actually fragile states. And so in those countries, the people that are excluded don't even have access to health, education, economic opportunities, connectivity. So there's a lot of factors in terms of governance, in terms of infrastructure, and in other countries in terms of social norms that explain why we still have 1.5 billion people without even access. So I think that is, as you were asking, what are the challenges on a day-to-day we have government with? I think these are some of the realities that as an industry, we need to grapple with. And that's leveraging, for instance, humanitarian cash transfer to reach them with financial inclusion, or addressing social norm through financial inclusion or otherwise. So that's one key aspect of our journey that I think remain unfinished. The second is what Linda was talking about, the trust and the consumer protection angle. We fully agree that risks are increasing so much, especially for newcomers that are less digitally and financially savvy, that we really need a new approach to thinking about consumer protection. We call it we need to build a responsible digital ecosystem where all actors play a role. It's no longer sufficient to expect that the government will provide sufficient consumer protection. We need private actors, public financial intermediaries, consumer protection agencies, and of course the government to all commit to creating a responsible ecosystem, build their capacities to do so, and collaborate to do so. But these are the two big, worries that we have on our minds, I think, in the industry. Now, going to Financial Inclusion 2.0, the vision is that, this being said, these challenges being there and needed attention, our journey for all those who are already included is also not finished. And our initiative is, as everybody else is discussed in this panel, to raise the ambition of all of us working in inclusive finance towards ensuring that we leverage the access that we've created, the products that we can offer to create positive impacts for their beneficiaries. And it's moving from access to usage and even beyond, in that with the challenges of today's world, that we probably don't even have the financial products that we need to fully, for instance, build the resilience of poor people to climate change, to enable their adaptation or to participate in a just transition and acquire digital technologies, or to enable, to really equip the youth that are completely without a job in many countries. And so it's about elevating our sides to these impacts and collectively designing our intervention so that we reach these objectives. Now, concretely, what CGAP is doing, other than convening this vision and trying to convene everyone to work with us around that, it's one, putting together a very granular understanding of the evidence that we have between financial services and these objectives, and understanding the factors that drive higher impact. So we can all work towards implementing those drivers and maximizing our impact. And on the other hand, it's leveraging AI and data to provide us with new indicators that we can use to measure our progress towards these high-level objectives and course correct as needed, so that we could have even, in an ideal world, real-time the outcome data of the impact of financial services on people's life. So that's what financial inclusion is 2.0 aims to achieve for all of us.
Where do you feel we are actually at that point? Like how have we been using this data to learn so far? And, what sort of solid takeaways do we have going into that? I mean, or do you feel like there's still kind of, despite all the information that's been collected, there's a lack of, tangible, actionable insights that we've gleaned so far?
So I think that in mindset, we all already know that this is what we need to do. So as Michael said, the industry has always said that, the finance for what concept has always driven us. We always knew that finance is an enabler of development. But I think in the how, we have not always, in the way, known how to maximize these impacts. And I'll give you a few things that I think have come in the way. One is the evidence that has been relied upon has been mixed in some cases. For instance, microcredit has always been criticized because if you look at RCTs, or randomly controlled trials, they tell you what happens with a certain product in a certain sets of circumstances, but they don't tell you why. Why is it working in some cases? Why not in another? And so we felt that there was a lack of putting together all this evidence for the sector and really understanding what do we actually know about these impacts and what drives mostly positive outcomes, but from time to time, negative outcomes. And how can we use that in an active management process to maximize positive impact? So I think one of the problems was this lack of granular evidence. I think the second is the fact that indicators to measure our success have been mostly relying on demand-side survey. So Findex, for instance, the Bible in financial inclusion is relying on demand-side surveys. Many impact investors or private financial institutions rely also on their clients' responses to surveys, and that's costly, that's burdensome, and that's infrequent. And so I think if we can leverage AI to have much more real-time granular data, we would be able to have a better understanding of what we're reaching. And I think maybe last but not least, developing products at the last mile to meet the most pressing but also most complex needs of the poor is not easy at all. Again, I'll come back to climate. We have a huge protection gap in insurance. Only 4 billion people don't have any access to insurance. most financial services providers don't have any products for adaptation. And even for green technologies and for enabling the poor to access green technologies, we have the pay-as-you-go industry for solar, but most other technologies remain out of reach because they're too expensive. And so developing products that are really tailored to the needs of the poor to meet these most pressing challenges remains an objective and a challenge for us. I think data can really help us there, and we can really do much better segmentation, understanding of climate needs, leveraging data. But that's the journey in front of us, if you want. I think that's where we are, and that's where we all agree we need to go.
Yeah, I mean, and just to build on that, I think, the circumstances in which, even people who do have access to those products today are finding that just given the nature and acceleration of climate change, the protection that those products and are offering is changing on almost a day-to-day basis, right? And so the environment in which actually this new wave of financial inclusion is going to unfold is going to be much more unpredictable and volatile actually than it was in the past decade. I know, all of your organizations are involved in this Financial Inclusion 2.0 initiative. Maybe we're very quickly coming up on the top of the hour. So I just want to go, maybe Linda, I'll start with you on what your participation in this and, what this sort of framework looks like, how that's going to be influencing MasterCard's strategy. And then, Michael and Renato, I'll ask you the same question.
Yeah, I really like what Sophie was just talking about with respect to leveraging AI grounded in transparent data privacy practices. But the power of next gen solutions and innovation in 2.0 is going to be at the forefront. And again, there's as many risks here as there are opportunities. But for us, this means, it's a calling card for us to continue to benefit from the transparency and the fairness that have already been built in our own AI models, and ensuring that risks of bias and algorithms are eliminated, and that we can ensure that credit decisions are made in an equitable and fair way. That is something that is paramount for us as we think about this next phase of digital inclusion. A digital economy for all needs to be coupled with data protection for all. I think we've anchored on this digital economy for all. It's a great rallying cry. I think we need to complement that with data protection for all. So I really loved Sophie's comments on that in particular. For us, it also means doubling down on the advanced fraud detection that I talked about earlier. It's not going away. It's only getting more sophisticated, and it's not something that we can do alone. And, I mentioned our Star Path program, which has been really helpful for us in getting access to the brightest minds and the latest technology. But that public-private partnership in this space of fraud detection is absolutely critical. And then the third element, education and awareness. Financial literacy, continuous learning journey that we are all on, with our partners around ensuring that consumers who have access have the ability to understand what they have access to, how to use it for good, and how to be aware of the risks cannot be overstated. So again, AI, fraud detection, education, and awareness, top of mind for us.
Wonderful. Linda, thank you. You sort of teed up the kind of look ahead, not only in what you're going to be listening for the rest of this week, but just, what your own organization's work is for this next decade is going to look like. Renato, I'd like to ask you that same question, actually. What are you, in light of this, Financial Inclusion 2.0 initiative, what is the Central Bank of Brazil thinking of next? And also, just as you're tuning into these conversations, what are you listening for this week?
Absolutely. I would like just to step back to in a sense, to dialogue with what Linda and Michael said, especially about countries that are not perhaps ready as Brazil and India were to go for digital public infrastructures. And on that respect, I think that one precondition that's really essential is telecom infrastructure. That's something that cannot be understated. I think the importance of telecom infrastructure is essential because it's precisely connectivity and precisely the technology that can intensify competition and break all the inclusion barriers that existed before. So I think that's one precondition that has to be addressed much before other things. I would also like to echo Linda's concern about fraud. I think in Brazil, fraud plays an outsized role in people's minds. I'm unhappy to report that Brazilian fraudsters are very, very creative. So it's really it's really daring for the industry and for the central bank to let's say to address this issue, right? And it's important that people be protected from fraud precisely because of the trust ingredient that's so important. I mean, we all know here that a payment scheme is only successful if people have trust on it. Trust is essentially the main asset that a payment scheme has. And on that respect, one thing that we're doing here and that I think may inspire other places is that we have a digital public infrastructure that's precisely devoted to fraud. So we have something that's called DICT, which is the database for aliases that's used on PIX. And this alias database is fed by all institutions that are participants on PIX, that's essentially all institutions that operate in Brazil, with fraud markers that could have helped on PIX or even on other payment schemes. So that's a shared information device that all institutions can use. And so when one sees that my ID has a marker, for instance, whenever someone is going to make a transaction for me, a smart friction appears or the transaction is outright rejected. So my concern is that these coordination devices for fraud, they in many places, they exist within proprietary schemes or, as walled gardens. I think it's good to have a digital public infrastructure that brings all institutions together to share fraud information from whatever scheme. I think that's a public good that can bring trust to all payment schemes in the industry.
Renato, thank you so much. We just have about 1 minute to go, and so I want to just give Michael an opportunity to sort of close out and give us a sense of what
So just to wrap up on some themes here, I'm very, very excited about Financial Inclusion 2.0 and what Sophie and CGAP are doing. And if you think of the PIX database, it has 40% of all the transactions in Brazil, and UPI in India has 40% of all the world's transactions. So we have data we've never had before, and we have AI and algorithms that can understand that data. So we should be able to see linkages, correlations, and impact, and see what really works in people's lives. And that will help us figure out what's going to work best as we get to the challenges of reaching the next billion, which again, we all acknowledge it's harder. And the last thing I'll say is just echoing Linda, I love the notion of all of us have superpowers. I sort of feel we should end with the call of saying, Avengers assemble, and you've got this financial inclusion, and all of us come together and look at what we did over the last decade, and look at what we can do over the next decade. So very exciting, very optimistic.
Yeah, I think we've proven our superpowers over the last decade, right? Now it's just supercharging those. I just want to thank you all so much. I know an hour goes by very quickly in a conversation like this, and also that it's a big ask to do a setup like this for what's coming in the week ahead. But I know I personally am very excited to tune into some of these conversations that you all and your colleagues will be engaging in, and to learning from where we go from here. And so with that, I will wish you all a great day, and enjoy the rest of the week. I'm sure it will be very fruitful and thoughtful. Thank you.
Thank you.
Thank you.